Nonetheless, Danny, whatever is happening is so far outside the realm of anything we've ever seen. Outlier, it just doesn't even begin to describe what it truly is. So crazy things happening for sure, man. What we're seeing coming out of London, out of Singapore, out of Shanghai, out of Switzerland is wickedly an anomaly. We've never seen it before like this. The United States, to my knowledge, my entire career has basically been a net exporter of gold. And to see things change since November the way that they have is, when I tell you I've never seen anything like it in my career, that's an understatement. Since November, when obviously we saw the election, it's as if there was some discussions going on leading up to this, because since November, we've seen, I don't know, somewhere in the neighborhood of 13 million ounces of gold and roughly 50 million ounces of silver imported from London. That's just London into the U.S. vaults. Now, as you mentioned, you got the refineries out of Zurich. You have shipments coming out of Singapore. And all around the world, we are seeing metal flow into the COMEX market to where the vaults have increased by north of 75%, closer to 80% in terms of their the gold holdings. And this is something I don't think really we can underestimate, no matter what all of the pundits and talking heads are saying. Look, some are saying it's because of Trump tariffs. I think that's the cover for it. I think that's the guise, the ruse. There are people who are saying that it's the Basel III regulations that come into play July 1st, and the abandonment of the paper derivative in favor of the real thing, as Basel III would demand. Or maybe it's much bigger. February contract, the largest delivery we'd ever seen on COMEX ever was 47,132 gold contracts at 100 ounces apiece, and that was in June of 2020. The February delivery amounted to 59,296 contracts. That's the largest delivery or number of contracts that stood for delivery in the history of the COMEX market by over 12,000 contracts, rather. You're talking 5,929,600 ounces of gold stood for delivery. It doesn't mean it left the COMEX. It just means it stood for delivery instead of having a paper representation of it or a cash settlement. No, we'll have the metal, please. No, you can leave it in our account in COMEX, in one of the vaults. Some of it left. But that's way, 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 way off the charts from anything we've ever seen. About 14 million ounces of silver also stood for delivery on the February contract. And then we see JP Morgan, who has just said that for the February contract, they will deliver $4 billion with a B dollars worth of gold. And you know, Blythe Masters, who used to run their account or their trading desk, is famous for saying, and you can find it on YouTube, that JP Morgan doesn't buy for themselves. It's always for customer accounts. So which customer has $4 billion? I guess it could be Warren Buffett, or maybe it's the federal government. This is what we know of in any case. And who knows how much more has really come in. And, you know, there are many things that we see happening along these lines. To me, taking a look at what's happened with the ETFs is something that also needs to be added to this equation, where, you know, it always bothered me, Danny, that JP Morgan was able to retain custodianship of SLV after paying the largest fine the Justice Department ever handed out for a criminal activity. And that was $920 million for manipulating the silver and gold market. And it should have been a lot more. It should have been RICO. They settled on spoofing. And when I say settled on spoofing, it's as if they just wanted to slap them on the wrist, as the bank made $1 billion on their gold desk that year, paid $920 million fine. Now, mind you, a couple, their head trader, two of their the guy that ran the desk and their head trader, Michael Nowak, and another gentleman, they're still in prison, I believe. but the desk made 80 million bucks, and they got a slap on the wrist in the respect that they're still allowed to be the custodian of the world's largest silver trust and several other ETFs as well. And HSBC was always the one that ran GLD until now. BlackRock and JP Morgan are now the custodians of both SLV and GLD. And that's an interesting take, if you will. In two vaults that JP Morgan controls, one in London, one in the United States, they now possess more gold than over half of the G20 countries. I've been asked many times, Danny, do you think gold will be confiscated again? And I've usually on podcasts like yours said, no, I don't. I think it'll be the ETFs that they take instead, in the respect that you have these massive stockpiles of gold held by the criminal cartel bank. In this case, I used to say banks, but now it's the bank that is controlling these massive stockpiles of gold and silver. And in the prospectus, it says very clearly that you and I cannot take possession of the metal out of there. It's a price representation. You have to be a behemoth like a commercial bank who has the ability to fund or withdraw what's called a basket, which would be tens and tens and tens of millions of dollars. The rest of us can only redeem our shares for money. Now, I find it very interesting, again, that there's been this talk of, as the price of gold has gone parabolically higher, that there's been profit taking coming out of GLD, as we've seen shares being sold off. And the conventional wisdom is strong interest rates, rising dollar, profit taking, Trump trade, risk on, NVIDIA, Bitcoin, etc. 16 tons of gold worth of shares have left. I say bullshit to all of it. That's not what happened. What happened is what's called share redemption by the banks like JP Morgan, who can redeem those shares, pull the metal out, and do so in a very, very private, opaque manner. And this has been going on for a very long time. So what you have, in essence, is JP Morgan, I believe, amongst others, pulling that metal out before something, whatever that something is, happens. And, when we talk about gold, it's no coincidence that it's the only other tier one asset and in the world next to U.S. Treasuries. And when we see that the central banks have been buying it really since 2017 in an unabated fashion, except the U.S. hadn't taken part in any of that until recently. And I think it should not be underestimated, the fact or not taken very seriously, that we've become a net importer since November. And to see this inflow and these massive deliveries and these massive deposits, and JP Morgan controlling GLD and SLV, and Judy Shelton, gal who I did an interview with, who was Trump's nominee for the head of the Federal Reserve in 2016. She wasn't confirmed, but she's far more qualified, I would argue, than Jerome Powell, in the respect that she is someone who understands Austrian economics. She is incredibly well versed in Keynesian economics, but favors Austrian. She understands gold. She is a plethora and a wealth of information. One of the smartest people I've ever spoken to in my life. And she said to me, Andy, we discussed Trump issuing, he and I discussed him issuing gold-backed treasuries in 2016. And I believe he will do it this time on July 4th, 2026, the 250th year anniversary of the country. He will issue treasuries collared to gold, redeemable in gold. And if you read her book, you'll see she also advocates for shorter duration treasuries doing the same thing. But she mentioned to me on our interview, 50-year is something she is very confident he will issue. I said, Judy, do you, and this was about a month and a half ago before all the talk of Fort Knox, I said, why has gold not been audited, really audited? And she says, it's pathetic. She said the United States should have no problem spending a few $1 million and dealing with the logistics, because she said it's pathetic. They always say it's too costly and the logistics are too difficult, as some is held in West Point Mint, as some is held in Fort Knox, some is held at the Federal Reserve Bank in New York, et cetera. All of the excuses are stupid. I said, gold is held, Judy, in an account called the gold revaluation account. You familiar with that? And she said, yeah, actually, that's an interesting name for the account. And what's interesting, I've been saying this for 2 years, Danny, since the head of the Dutch National Bank has been saying we should revalue our gold. That is held in the gold revaluation account, still valued at $35 an ounce in Europe. Nixon, when he closed the gold window, revalued gold from 35 to 38 in 1972, and then from 38 to 42.22 in 73. So there's two examples of gold revaluation, and gold revaluation over my shoulder. When Roosevelt confiscated gold in 33, it was $20.67 an ounce, I think they paid. The gold coin over my shoulder is a $20 gold coin. So everyone made 67 cents for doing it. Seemed like a good deal. When a dozen eggs is a nickel, that probably is a good deal. And then he devalued the dollar immediately by 40%, pushing gold up to 35. So gold revaluation is something that is, it's not without precedent. And I said, look, you even got members of the Bundesbank advocating for it. And now you have Senator Loomis from Wyoming, who spoke in Tennessee after Trump at the Bitcoin meeting, advocating for revaluing the gold held in the gold revaluation account. I can't make that up. That's the name of it on every central bank balance sheet, and revaluing it in order to provide enough liquidity to buy some Bitcoin for the strategic account. So I'm not saying they're going to revalue gold, because I don't know how this all plays out. And what I will tell you is something big is happening with gold. It's much bigger than I think the talking heads are talking about. It's much bigger than Trump tariffs. I don't think it's just playing the arbitrage between the spread between London gold and New York gold, which is 20, 30 bucks higher in New York, signaling a massive shift to get gold. Look, you have these unallocated positions that need to be backed. It's put London in a very precarious position. London is supposed to be a T+1 delivery, where your trade is T Monday, +1 is Tuesday, Wednesday you should have your gold. They're now T plus 6 to 8 weeks. They say they don't have enough manpower or enough trucks. I mean, what kind of crock of shit is that? The Bank of England doesn't have enough trucks, you're telling me, right? So this is all, there's a lot of supposition. I understand that. There isn't anything definitive, but what I will tell you is that what is happening with the gold imports into the COMEX and all of the movement around the periphery is so far outside the realm of anything I've ever seen that I tend to believe that it's something bigger. My guess is that this is gold that they would want to use for Judy's plan. You see, who the hell wants to hold U.S. Treasuries anymore? They've been weaponized. They've been inflated. Interest rates are rising, which is, again, hurting the value of the 10-year Treasury. And even Judy said, who would want to hold duration Treasuries any longer in this environment? We've lost confidence. And as Zoltan Pozar said long ago, this is about transparency, which would be blockchain. This is about commodities, which would be gold. That's Bretton Woods 3, which is loosely a new system he describes as transparency in commodities instead of opaque debt instruments. But what has Elon Musk said? Let's put all of the government spending and the debt, all of it, put it on the blockchain for everyone to see. Well, how about the gold holdings? Judy said, I would like to see them issue stable coins on part off of the gold-backed treasuries. All of this could be on the blockchain for everyone to see, giving immutability, transparency, legitimacy, confidence. That to me is where it seems to be going. Now, will they revalue gold? Look, it's valued at 42.22 on the balance sheet. They could market to market at where we are now, 2,900 and change. That would inject, 700 or 800 billion into the Treasury. What if they were to market much higher? What if they were to market to $40,000 is a number I see a lot of people talking about, which would represent somewhere in the neighborhood of a 40% gold backing based off of M1. There are people saying 24,000. There's all sorts of numbers, but you know this, that every $4,000 increase in the price of gold would give the Treasury general account $1 trillion free and clear for every $4,000 increase. Now, it wouldn't be that difficult. Trump would tell Scott Bessent, the Treasury Secretary, to instruct Jerome Powell to revalue the price of gold. And that is what it would be. I mean, whatever someone is willing to pay, especially an entity like the U.S. government, is what the price would be. And, you know, when you talk about Scott Bessent, as he was a hedge fund manager, and running a hedge fund, a big one for Soros, his largest holding was gold in that holding, in that hedge fund. He's talked about his largest personal holdings being in gold. He mentioned recently, now he backtracked from it, which I think maybe was just doing triage, but he recently said his intention is to monetize the asset side of the U.S. government balance sheet. If you look at the U.S. government balance sheet, it's horrible. There's just over $5 trillion in assets, the largest being student debt of about 40+%. Not going to monetize that. The next largest is military bases, bullets, guns, airplanes. Won't monetize that. Now you could monetize number 3. That's the land. You could lease it out, or, you know, do things to drive income from it. But the most logical one would be gold held in the revaluation account. Will they do it? Don't know. I don't think it's to bring gold home to restock Fort Knox before they do the audit. I don't think that at all. But